And today I'm here with my teammates are CUбурхN, Thúy Hương, Thanh Hương, and Quỳnh Hương. First of all, I'd like to give you an overview of the case we received. It is about the misinterpretation of the processing context, resulting in the incorrect recognition of the revenue. And with this case, my team have lots of assumptions. Each assumptions lead to different effects. So my team choose the possible assumptions to present. The manufacturing and processing company applies the accounting system according to Circular 200. Currencies is million Việt Nam đồng. And during the year, no dividends were paid to the shareholders. The one-year processing contract was signed on the first day of 2021, and the customer will pay exactly 3,473 million Việt Nam đồng when receiving the goods. When signing a contract, because of the bulk orders, the company gave the customer a commercial discount of 1 million Việt Nam đồng. At the time of signing the contract, due to the misinterpretations of the contract, both revenue and trade receivable were recorded. And at the time of the delivering, the accountant once again recorded the revenue entries with the corresponding expense entry. This is the correct entries and the incorrect entry, illustrating to the assumptions. I will invite Ms. Trình to continue the presentation.
And now I will talk about by part. This particular misstatement affects the income statement. Inflating revenue, causing the gross profit, net profit from operating activity, free tax profit increased 3,474 million Việt Nam đồng. Overstatement of corporate income tax expense 694.8 billion Việt Nam đồng. Overstatement of profit after corporate income tax 2779.2 million Việt Nam đồng, and it affects policies. About the assets, so because the trade receivable increased, so the total asset increased by 3,474 million Việt Nam đồng. About the liability and equity, because overstatement of undistributed profit, taxes in order payable to the state increased, so the total resources increased by 3,474 million Việt Nam đồng. And the financial statement assertion is affected. Occurrent revenue, gross profit, net profit from operating activity, free tax profit, corporate income tax expense, profit after corporate income tax, existing trade receivable, undistributed profit after tax, taxes and order payable to the state, right and obligation, trade receivables, taxes and order payable to the state. Next to her presentation.
In addition to this assumption, there may be some different situations, such as the contract terms. For example, processing contract has a terms of 2 years, with the final payment after 2 years is 69.47 million. In this case, the accountant misinterpreted the contract to record total revenue in 2 years for only 2021, could lead to different impact. Whatever the situation is, the above error may affect the following. First, the processing revenue will affect the operating cash flows in the cash flow statement. Second, the cash flow statement is also impacted by the tax deduction method for both direct or indirect method. Third, the labor cost can be affected if salary or bonus is calculated by the percent of revenue, which is seriously affect the cost. And in addition to the cash flow statement, the above error can affect the 2021 annual report. Specifically, by changing the items in the financial statement, it can directly impact the financial metrics like liquidity ratio or efficiency ratio, and it will make the financial analysis become invalid. Next, the equity surplus. Also, in case the company issues shares in 2022, the overstatement of revenue in 2021 can lead to the over-evaluation of the company and will make the investor to pay more to get the company shares. So the company will have the additional equity surplus. Next, we'll come to part 2, presented by who?
In the financial statement for the year end December 31st, 2022. According to BAS 29, Changing Accounting Policy, Accounting Estimate and Error. On the slide are the principle of error correction for material and non-material error in the financial statement. In this case, the material error was due to a misinterpretation of the processing contract in the audit financial statement, and this error could estimate its value and impact on the financial statement. So my team will do retrospective application. Retrospective application. According to Article 23 to 28, this is understood as the assessment of recognition, valuation, and presentation of items in the financial statement as if prior period error has never occurred. Accepting entry, debit, undistributed profits after tax, debit tax and other payable to the state, credit checks receivable value as shown on slide. Next, we will continue the presentation.
So thank you, Ms. Hung, for the information. Well, the adjusting entry will definitely cause some changes in the financial statement. Next slide, please. Okay, thank you. So first we will have a look at the income statement. In 2022 and 2021, the revenue to the pre-tax profit will decrease by 3.7 million Vietnam dong, and with a tax rate of 20%, we will have the corporate income tax percent will reduce by 694.8, and as a result, the profit after tax will be declined by 2779.2. Can I have the next slide? For the balance sheet, we will witness a decrease with the same value at the income statement for trade receivable, undistributed profit after tax, tax and order payable to the state. Next slide, please. And so there's some information that had to be included in the notes to financial statement. So first is the changes in equity. I mean the undistributed profit after tax. The second is the data before and after the adjustment, which my group have already shown in the questions 1 and 2. And finally is the nature of the error. I mean, this is because the accountant didn't write didn't recognize the revenue in the right time period, and then we showed how it were corrected. So that's all of our presentation. Thank you, thank you everyone for listening.
So can you show your slide again about the 2 years, 2021 and 2022? In the question here, so the processing revenue just affect in 2021, right? But why you mentioned 2 years? And it means so the processing revenue here in 2021, but also affected in 2022, and why? That's my questions.
Thank you for your question. Please, next question.
Xin cảm ơn câu hỏi đến từ vị giám khảo đầu tiên, và câu tiếp theo các bạn sẽ chú ý lắng nghe để ghi chép cẩn thận các câu hỏi của mình.
Okay, thank you very much for the great presentation and things. Yeah, and I have a question for you related to the internal control system. Yeah, and would you recommend a control point to prevent the wrong in revenue recognition? Yeah, is that clear? Repeat again, right? Okay, thank you. What is the control point or points recommended for preventing the revenue recognition? Thank you very much.
Yeah, thank you for next question, please.
Dạ, xin kính mời vị giám khảo tiếp theo của chúng ta.
Yeah, I have a short question. If you are the auditor and this is your client, so what is the impact? Can you evaluate the material misstatement on the financial statement of the client? So if you are the auditor, what will you do? Yeah, if you are the auditor, now you come to the client and have a financial statement and the case like that. Yeah. So what will you do in this case? You are not a chief accountant. Now you are supposed you are the auditor, not the chief accountant, right? Yeah.
Sorry, I want to clarify the question. So you mean that if we are accountant and in the past we have like wrong opinion on the financial statement?
No, if you are the auditor, yeah, you are a CPA and you come to the client to do the audit, okay, and now you find out that the revenue is incorrect, right? So what will you do?
So thank you.
Yeah. Have you ever learned auditing? Yes.
Yes, I learned at school. So
Okay.
thank you. I will answer this question. It's about how the error in 2021 will affect the financial statement in 2022. So, because the errors when recognizing revenue in 2022 will increase the ending balance of some accounts in the balance sheet, like the trade receivables, taxes and all the payable to the state, and the distributed profits after tax And since the ending balance of the 2021 is also the opening balance of the 2022, so the error will increase. So the errors in 2021 will increase the ending balance of 2022, resulting in the wrong recorded. Oh no, like the wrong number in the financial statement of 2022 too. And the second question is about what is the main control point in preventing wrongly recorded revenue. So the point to pay attention is to the first is the conditions, sales policy, and the payment term. I think it should be clearly agreed in the contracts. The secondly is we have to determine the transaction price and determine the time of revenue recognition based on the sale contract, because based on the circular 200, for revenue to be recognized, the following condition must be satisfied. The first is the risk and rewards of ownership have been transferred from the seller to the buyer. The second thing is with the collection of payment from goods and services is like reasonably assured. And finally, the amount of revenue, cost of revenue has to be reasonably measured. So moreover, to prevent wrongly recorded revenue is also the matter of the implementation of a robust revenue recognition policy and internal controls. So I mean that this policy should outline the specific criteria for recognizing revenue. So we should also pay attention to the assignment. I mean the responsibility of recording and approving revenue should be assigned differently to prevent any person from having too much control on the financial statement. We should maintain the proper documentation of sales contracts and like invoice and other supporting document to ensure that revenue is recognized correctly.
So how many questions you answer?
3 questions.
How about question 1? You done or not?
Yes.
Not yet, right?
We have already answered it.
Okay, and now you move to question 2, is it right?
Yes.
Okay, thank you.
Okay, I will continue answering. I think the third one is we have to regular review our recognition policy and procedure. The next is monitoring and analysis of revenue transaction. And finally, we should provide some training and education for the staff to ensure they are aware of the criteria for recognizing revenue and complying with the policy. So the final questions will be presented by Ms.
I would like to answer the questions 3 from Ms. Chi. Based on auditing standard VSA 240, if I am an auditor to audit the financial statement in 2022, it's necessary to evaluate risk and materiality from which to come up with a specific audit plans. First, I will collecting audit evidence like processing contract, receipt of goods deliveries minute, bank account statement. Second, I will perform basic tasks like check the counterpart document, detailed book of account 112, 131, 511 on business record. Third, I will interview the chief accountant, the board of directors, or the contract signator about the content of the outsourcing contract in 2022. And then third, I will send a confirmation letter to the customer about the amount paid into the company. Then I need to re-evaluate and determine whether the error is a manifestation of fraud or not. If there is fraud, such as intentional error, I will notify about the fraud to the board of directors and other relevant authorities. If it is an unintentional error, I will require the company to make adjustment according to VAS 29. If the company make adjustment, it will issue an additional adjusted audit report to 2021 and evaluate its validity, truthfulness, and reasonableness of the financial statement for the years 2022. If the company refuses to make adjustment, then express opinion except for the items affected by material misstatement. In the case I am an auditor to audit the financial statement in 2021, I will perform the same audit procedures for 2022. However, instead of issuing additional adjusted audit reports, I will need to request the audited company directly to correct errors for the years 2021 in the report, financial statement, and fair judgment. If the audited firm does not coordinate the adjustment, I may express an unqualified opinion. It's all of active questions. Thanks for your listening.
Excuse me. I just have a short explanation about my question. Yeah. If you are the auditor, first of all, you should do the risk assessment. You have a lot of procedures. This is correct. Some of them are correct. But first, you should do the risk assessment. Why the error in 2021 is founded in 2022, right? Yeah, why? You should answer the question first. And the second is you should work with the auditor, with the previous auditor that do the audit in 2021. You cannot, as you mentioned, you ask the previous auditor that last year you do the audit and it is wrong, so please come back and correct it. No, you cannot do that. According to VAS 29, accounting policy, accounting estimate, and accounting error. If you found the accounting error in the past, you should do the retrospective adjustment. And in your presentation, you present the retrospective adjustment is incorrect. So that's why you have the question from Ms. Chan. Yeah. Please remember, revenue has no balance, right? You record in the revenue and then you transfer it to the 911, right? No balance. So that's why when you present 2021 and 2022, it is incorrect. Yeah, so a lot of things we have to study more. And I noted that in BİT Australia auditing company, you have the answer, right? For this case.
Thank you. The question was from me, so I have some explanation for you. The purpose of the questions is to draw the attention of the so-called chief accountant to the final product of accounting, that the financial statements. In the case where the financial statements was error in the previous year, so here we have a hint here. Think of the items and the financial statements that could be affected. The errors from the error in the recording of revenues. So the revenues for the recording of the revenue, some accounts be affected. For example, account receivable. The second one relating to the cost of goods sold and account payable. That means you should think that the error affect which items in the financial statements. In this case, that's a specific case that affect the short-term receivable, short-term payables, short-term prepayments, and profit after tax. So, for the presentation of the financial statements, for the disclosure in the financial statements according to VAS 29, you remember that the balance sheet, you have two columns. At the beginning balance, at ending balance, on the first day of this year and 31st December. So in the column of the first day of the year, you should note that restatement. If that affected the balance sheet should have a note restatement. Please see note blah blah blah in the financial statement. If that affected the income statement, the income statement should have a note that restatement. See note blah blah blah. And if it affects the cash flows, then the cash flow should have the note that refer to note blah blah blah. And in the financial statements, the note to the financial statement, you must have a paragraph explain the reason why the error occurred and the error be restated as blah blah blah. For example, the account receivable as previously reported, adjustment and restatement. The item follows and follow items. And if it affected the income statement, then the income statement should be presented in the same way. That's the purpose of the question that I would like you to consider. You understand? Thank you.